welcome to the Real Advisor Podcast, TRAP, TRAP. Please follow us and join in the conversation on Twitter @Advisor Podcast, where you can suggest ideas and themes you'd like the TRAP team to discuss. Also remember to like and subscribe to our YouTube channel and leave a 6 out of 5-star review on iTunes. Doing all this really helps us, which means we can do more to help you. Now let's head over to the studio for the latest pile of TRAP.
Yes, indeed, dear Trappists. Welcome back to what many people are calling episode 70 of the Real Advisor Podcast, TRAP TRAP. My name is Lick Lincoln, and joining me as ever in the digital studio of doom are the 3 other horsemen of the apocalypse. Alan, the storyteller Smith, Carl Delavocci, the voice widger, and Andy Ultra Heart. Now, gentlemen, we have a show packed full of absolutely nothing. So let's start unpacking it straight away with some more high-energy review reads read out by my very good friend, the Right Honourable Mr. Andrew Ursane Hart.
Thank you very much, Nicholas. The first one's a little bit embarrassing for me, but I'll read it anyway. 5 stars, Luke Jeffrey, entitled Good Set of Role Models for Anyone in or Entering the Sector. Listening to Trap as a result of Maven Money and the excellent wisdom served from Andy Hart. 6 out of 5 stars. More complicated. Come on, straight off the bat.
Andy, the ultra crepidarian.
I've got to read these out. People have
knows
left
about
them.
everything. Andy can't be told anything. His name is Andrew Hart. Andrew Hart.
We're
I
getting
could see how absolutely mortified you are
I was
there.
when I had
So
to read
embarrassed.
This is backfired. We're getting into the spirit of Trap Live. More on that later. Following the rest of the review, more compounded wisdom served from 4 very experienced advisors. Thank you for your good work, guys. I'm not going to read the next bit. He's basically saying, bring back Maven Money. Right, the final review, Sammy Butch, entitled CPD Hack. Could this be the best CPD ever? And the show notes are a real gift. Keep up the great work, gents. Best wishes, Sam. Back to you, Nicholas.
Okay, lovely. Thank you. Thank you, Luke. Thank you, Sam, for your reviews. They are just like gold dust to us and our inflated egos. Really appreciate it. And I'm glad somebody actually looks at the show notes, which is nice to know. Okay, so episode 70. What's anything happening? Anything coming up? Yes, of course there is. The next episode, episode 71, will be Trap Live, recorded at the Royal College of Physicians in front of about 150 odd mad raving Trappists. I think we've pretty much sold out, guys. Is that the message I'm supposed to be pushing? We didn't talk about this before.
Yeah, we could, seriously, about another 2 tickets. If someone is desperate and they're around next Wednesday.
Okay.
But I suppose it should be said that if you have got a ticket and you can't go, please do let us know, because there are people who are looking for tickets. So.
Or not let us know, give someone
don't let us
else.
know.
Yeah, someone else that wants to go.
Don't get us involved. You cocked up. It's your problem.
Well, clearly don't get me involved, because I don't do anything.
Don't get Carl involved.
Well, we had this last year, didn't we?
Just give it to someone else, or do a post on LinkedIn saying you got a spare ticket. Like, we're happy for you to just switch it without.
The black market rate will be crazy. It'll be just off the scale. I mean, ticket touts outside. God.
You can buy it with Bitcoin. We'll talk about that later. Okay, all right. So looking forward to that. Can't wait. And we're all prepared and excited, aren't we, gents? Okay. Yep. So the first topical tidbit. I know. Let's put a timestamp on episode 70. This is a story that's never done the rounds before, Alan. Well done. Crack on.
It hasn't done the rounds before, but it's come up yet again on the back of some recent market. Did you know there's some market volatility recently?
Apparently.
Did you notice?
Up and down.
Emergency podcasts, you name it.
The last one? Was the Trump tantrums of the episode before? We were talking about it, weren't we? It's all kind of just in the background now. But yes, sorry, do go on.
Well, guess what? I mean, markets are now pretty much returned to the level they were around about the time of, what do you call it? Independence Day, Freedom Day. What was it called?
Liberation Day.
Liberation Day. And it was some title.
Anyway, markets he didn't want to do it on the 1st of April because it would have seemed like an April Fool's. It's just amazing that is the level we're at.
It's wild. Anywho, what we're often told, and for young trappers listening to this who haven't been through a lot of volatility in the past, is, I mean, let's face it, there have been some bumps in the road, but going back to, pretty much 2009, we've had the markets have generally gone broadly up. Of course, we had 2020, we've had a couple of other bumps along the way, but they're generally broadly going up. And those of us who advocate for low cost index, call it passive, call it smart beta, call it what you will, always get some pushback from those who advocate for the dark side, Nicholas. Active management, active trading, moving in and out of stocks, timing the market, all that sort of stuff, because those proponents of that style of investment always say, yeah, that's all well and good when markets are racing away. It's easy to track a market as it's going up. You just wait, they tell us. You just wait when there's some volatility.
Yeah.
That's when having a professional, informed, active trader, manager really comes into the room. Well, guess what? We've had the volatility.
Turns out it
recently. We
didn't.
continue to have some volatility. There's just an interesting article. There's lots of this out there. There's an interesting article that I noticed on TrustNet. If anyone looks at that, subscribes, quite useful. A bit like Morningstar, but lots of data. But they just did an article saying that despite all the previous promises, the active managers over this recent period of volatility have actually underperformed like a passive tracker. Obviously, the tracker fund has tracked the market down, but the vast majority of the active managers have also tracked the market down, but even further and faster than the index funds. I posted a link to the article in the show notes, but there's a couple of glaring examples. I mean, you focus on, just take one example, the focus on the tech stocks in particular, which obviously have really borne the brunt of this recent volatility. Markets down. The IA technology and technology innovation sector put in the worst showing of all the sectors and fell about 19.7%, whereas the average active fund on the same sector fell 24.6%. Special message must go to the Lion Trust Global Technology Fund, which fell by 31.6% over that period of time versus 19.6%. So, we are kind of, playing the same song, same old story. But again, it goes to show you that the data, the facts, and the evidence do not hold out very positively for those who follow, active trading in and out of markets, whether markets are going up, sideways, or indeed going down. It's a useful article.
Yeah, point well made. And I wonder how much more Cathy Wood's ARK fund has suffered if those other tech funds have suffered. Right. Della Voce, the voice. Make this exciting.
Sorry, what's up next, Nick? Remind me again.
No?
Someone else tell me, because I don't have the show notes in front of me.
Revolut launching into
Yeah. See, this is why Trap Live isn't really that much of a challenge for me, because I won't have notes. You'll all be going, oh, Jesus Christ, we don't have our notes. What do we do? So, yeah, Revolut.
We're going to be lost up there. You're going to be in your element.
Exactly. I'm just like sitting there just doing what I always do, just smile and just talk when I'm called upon.
So what's next?
When it goes extra quiet, you start speaking. You just know it's your turn.
Yeah, exactly. That's actually precisely how it works. But anyway, look, I think this is good news, because I've been bemoaning the lack of competition in the Irish banking sector, and that the pillar banks here have kind of been running away with themselves in terms of profitability because they haven't been challenged. And we're going to be talking about fintechs later on, but this is, Revolut coming in and really making a real impact. So what they've done is they've done two things. They've brought together, they're entering the mortgage market, I think it's next month, in Ireland. And in advance of that, they've swept up 1 billion in savings from Irish savers. So Irish savers are trying to build up their savings with Revolut in order to be able to apply for mortgages with Revolut. So very clever by the Irish savers, I would say, but also extremely clever by Revolut to announce it in advance to hoover up that. But this latest announcement is that they're now going to be providing corporate deposit rates as well. I think it's about 1.5, 1.6, 1.7%, depending on terms that you'll put it away for and that kind of stuff. Honestly, I can't see them making much of an impact. I can't see big companies putting loads of money with the likes of Revolut just yet. But having said that, good for competition. And if it kind of wakes up the Bank of Ireland and AIB guys and gals to provide some reasonable rates, well, that can only be really, really good.
What's the going rate with the other banks then? I mean, how much better are they?
Well, in terms of the corporate deposits, like you're pretty much getting nothing at all. So they've had to react on the, I've spoken about this a good bit, on the individual depositors. They've if you're willing to lock it away for 6 months or a year, they're competing now against the likes of Bunk and Raisin.ie. But I know that the corporate deposits are pretty much non-existent here at the moment.
Revolut are absolutely killing it.
They're killing it. Their profits, I was going to say, their latest profits
UK
are astronomical.
fintech unicorn.
Yeah.
What a great story for
Its net
UK
profit
fintech.
is insanely high, like 35% or something, ballpark like that.
Although the founders have relocated to Dubai, which is a whole other story.
Wow.
Well,
Wow,
bank founders can work anywhere. It's them boys.
Yeah, but that says a lot. But they're a magnificent company, and like I don't know if you've used, like for me, like going from euro just to if when I go over and see you boys, I have a sterling account. If I go to the States, automatically I have all done in my app with Revolut. It's just absolutely fantastic.
It's great for kids as well. I've got the kids' accounts as well, and
just so good
when
it
my
works.
teenagers constantly ask me for money, I just ping it across to them.
100%. I have a daughter going to the States later on this summer to college there, and it'll be really easy. Like if she says to me, "Dad, I need money," it's like right through the app, just send her money, and she'll be able to transfer it from her euro account into her dollar account straight away. Absolutely.
Who needs Bitcoin?
Who needs Bitcoin when you got Revolut?
Exactly.
You said it, Nick, but look, just hold fire just for a little bit of time.
I'm just thinking, no wonder your banks are making enormous profits.
Yeah.
Wodge, because the Irish Clearing Bank's prime rate, as you know, is 4.15%. That's the rate they lend out to businesses for short-term borrowing, and they're giving bugger all back in interest on deposits to corporates.
Well, no, they're giving a little bit more, at least now, than they were because of the likes of Revolut and Raisin and Bunk and these guys. So their profits are down slightly, but they've just given guidance for the first quarter, and their profits are in line with expectations. Like they were making $1 billion every 6 months for the last couple of years. So
our banks, the latest numbers they've come in, Barclays, HSBC, Santander, astronomical profits. I mean, the spread they make on monies, I think it's gone up to about 2.7 now on average.
Yeah.
So it's insane.
And we still can't open a bank account with them.
Still can't open a bank account.
Yeah, but that's a proper that's a proper reduction in yield. That means something. That spread, but it's not.
Carl,
nobody knows about it.
Because there's a lot of exciting subjects here, just to manage my own expectations. Are there any updates on PRSA Corner?
PRSA Corner.
Because I'm not sure. I may need to.
I think Revolut's going to launch a PRSA. I don't know what they're doing. You just get your money.
They
take
will
it
have
out,
some-
I have some
switch it to Bitcoin.
I have some big PRSA news, but I'm gonna hold it.
Hold
back
it.
for
Oh,
Trap
save
Live.
it for the live event. Oh,
Trap
keep that one
live,
up your
trap
sleeve.
Oh my
Jeez.
god, the excitement in front of a live audience. PRSA
But
Corner.
look, guys, I'll tell you guys directly after this episode, okay? So you won't have
keep it
to
secret.
Just,
Oh, it's still that beating heart.
excitement.
Okay, right. Next point. Ultra. Oh, lady.
Okay. Now, this point I found quite interesting. A few moving parts of this one, but I wasn't going to include it. Then I saw your link, Nick, about the longevity calculator, but you somehow moved it. This was meant to be a follow-on point from yours. But anyway, I'll keep it brief. Ethel Caterham has become the world's oldest person. She's 115. How has she become the world's oldest person?
We don't know. She's
not dead.
She's not dead, but the previous record holder in Mexico, that was a year older than her, sadly passed away. Obviously, it's a light-hearted story, but congratulations to her. But this does reconfirm, our business of people living longer and longer and longer and longer, and it is one of the biggest financial risks to our clients: living longer, retiring at pick an age, 60, 65. And these days, with longevity just racing away, pills and potions keeping people alive and well for a lot longer, it does, reconfirm that longevity is a real issue.
Do you know what we could do a deep dive on this on another subject, because if you read any of the stuff coming out of the kind of the technology companies, the AI-enabled technology companies in the US, there's an expectation. There's a great paper written recently that within 10 years,
alive today that's going to live to 150.
almost all diseases will be cured or fixable. Cancer will be all the top diseases, heart disease. So the impact from financial planning is just incredible. So,
I heard a great phrase. So your job now, because of the impact of all of that that's going to come down the line, is your job now is to stay on the pitch. So just make sure you stay alive so that you're able to, and reasonably healthy. Yeah. and just make sure that you can avail of all these
Yeah,
medical
don't die before the
advancements.
benefits kick in. That's
Exactly.
suboptimal.
Yeah,
Exactly.
Yeah.
Like, do
So
you remember
anyway,
that
we are.
fund manager that's still alive? That like him, just stay on the pitch.
Oh, we're mentioning him a little bit later on, maybe.
Oh, that guy, yeah.
Oh, right.
The
Okay.
world's most
Fund
legendary.
manager, yeah.
But yeah, the serious note for this is the asset allocation for long-term investing for most people that hit this fictitious retirement point and then just want to, obliterate their wealth over the next few decades because some ridiculous survey or mumbo jumbo questionnaire said about it. No, it's just all roads leading to global equities, the real asset class that smashes inflation long term. So
here's a question on this particular point. Then, if you have a perfectly healthy couple who are mid-60s and don't have any dependents,
Yep.
and they want to run their financial plan until age 90 for the two of them because it's ridiculous that we would run it to age 100.
Yep.
What do you do in that scenario?
It's an art and a science.
Because
It's a series of
have
conversations.
exactly
You
this,
run
and
through
it's-
the impact, the consequences. What if you did live to be 100?
Well, actually,
what if one of you do?
my longevity point might cover that off, Carl.
Okay.
Thanks, Nick. Can you do this after I bring up the pointless one about the lady living to the?
Are you still doing it? Oh, sorry,
I'm still doing it.
I thought
Go
you
on,
beat it
over
the
to
ground
you.
like a tent peg.
This is
I've
a
found
nice,
it- I've
this is a
found it
nice
to you
segue.
perfectly.
I saw the notes. Crack on, Nick. It's great.
Should I do it now then?
Yeah.
Oh, okay, good. Right. Well, Longevity Illustrator. This is an American site, so you have to look at that through the prism of American stats. But this is a great, easy to use site. You put in your clients' ages. You can do a single life. You can do a couple. You can do, are they in retirement? If not, what age are they planning to retire? You can put in their state of health, poor, average, or excellent. Do they smoke or not smoke? And it will come back with various graphs, how likely a married couple, because that's the most instances we're going to use it with real clients, how often a married couple, how long one of them will survive and retire. Well, actually it gives single mortality, joint mortality, how long the oldest one is likely to survive, and so forth, all in very graphical form, so relatively easy to digest for clients, even people that aren't mathematically that adept, which includes me. And I did it. The hat tip essay has come out this afternoon, hattipnick.com. Do sign up about this longevity problem. A male age 60, retiring at 60, female retiring at 58, husband and wife, 50% chance one of them's going to live for 35 years.
Yeah.
Just going to happen. And what I think is nice about this tool is you could use it with the actual card. You could use it with your actual clients and just put their dates of birth in, their ages and their names, and it gives you a nice little PDF report.
Carl can use this calculator.
Well, no, his team would. But Carl could be in the back making stamps or something. But absolutely. And it just brings it to life. Now, yes, it's based on US stats, so you might get some pushback from that. But this is pretty similar. I would imagine mortality rates in the States to us. I mean, this thing about them being big people. I mean, if you walk down a high street in the UK, for Christ's sake, I'm going to go long Dunkin' Donuts and tattoo parlours if I come back in a future life. So I don't think there's much difference. So Longevity Illustrator, there's a link to it in the so-called show notes. Use it with clients. For those clients who maybe are just cannot, but I don't think anyone who is turning 60, going to the spending stage of their lives, just cannot imagine that and the wife is 58. They just cannot imagine they're going to be around in 35 years' time. They just can't, can't foresee it.
But by definition, these are historical. It's historical data,
of course.
right?
There's no facts about the future. We're just going on historical information.
Exactly. So you can, by extrapolating and taking
you can make it further and say, with improvements to medical, if we'd done this 40 years ago, it would have been
underplaying it.
He's underplaying it. But Nick, here's the thing. I mean, that stat. Well, that's often quoted. There's obviously various different sources. That JP Morgan, when they do their survey, what did you call it? Their quarterly update
Guide to the market.
Guide to the markets. Really good. They often use that, and it's roughly those same sort of numbers. But then I've heard you talk about this in the past as well, Nick. That's for the broader population as a whole, and then you've got our clients, and there's increasingly data available, things like postcodes, lifestyle, affluence.
Whether you went to university or not makes a difference. If you went to tertiary education,
if you are still
you live
married
longer.
is a thing. I mean, just
married kids.
Fun fact.
Loads of data points.
There was some data I saw come out last year, and it showed the lowest life expectancy in the UK was the beautiful city of my birth, Glasgow.
Yeah.
And the highest was, well, one of the highest, the second or third highest, was where I currently live. So I thought I've added 10 years to my life. Yes, I've added 10 years to my life by relocating. But that's just the point. It's relative to location.
That was one of the questions,
lifestyle.
Alan. Where do you live? Then did you fill in the other questions? True.
No, I didn't do that.
There's different answers on a bank
should have been
holiday
dead 5
Monday
years ago.
or on a Wednesday.
Yeah,
That's interesting. But are there 40-year-olds out there now who are going to live to 110? And is our world changing?
Loads.
Yeah. That's what I'm saying. Like this is going to dramatically change, and it's part of our job.
We've all got recency bias, so we think about our current circumstances, friends that pass away, your parents, what age they died, and all those sort of things, and we haven't got the ability to project. And if you believe even half these stories that come out of this sort of technological developments, it becomes more exponential than linear. So it is very possible that it'll be far more common living to 100, 110, and beyond.
But you can see the chinks in the human mind with our real clients. Back to your point, Carl, you sit down with a client and say, here's a forecast. I'm popping you guys at age 90, 100. They spent the first 10 minutes of the meeting telling you about the mum and dad who's still alive and they've got problems and they're thinking about putting into a care home and he's 92, 93. And then when you say, I think you're going to live to 90. No chance, Andy. I'm going to pop it early. Even though they told you for 10 minutes about their parents living longer and longer. And I said, look, your mum is 92 in 2025. By the time you get there with all these pills and potions, you might be here for a long, long time. That's the
Ozempic. That's the one.
The guess. Yeah.
So, Carl, what did you tell these clients who wanted to push their mortality to 90, down to 90?
I forget. No, we had kind of long conversations about it. Now, they did have some property assets in their balance sheet, so I suppose you
were going to say PRSA then, weren't you?
No,
you can't help it.
We clearly are the only 4 people who think this is funny, by the way. But anyway, they could sell they could sell some of the properties out of their portfolio to fund lifestyle. But it was a tricky one because they were like, we're telling Nick, this is what we're going to do.
You know this anyway, Nick. If you forecast to 100, then they're going to be okay financially based on one life. By 90, they're going to be absolutely fine. If they run out of money, obviously it's a slightly different conversation. I sometimes create what-if plans where I kill them a lot later called exponential life. Like I'm having one eye on this, but that's probably too much for this conversation. Kill them at 110 and see if the money lasts.
That reminds me, years ago, early days of our financial planning journey, we had a client, we took on a new client. It was referred to us by his daughter, I think. And the guy was like 88 at the point of engaging with us. And so we ran, I don't know if you've ever run a cash flow model for anyone with, even assuming 100.
Yeah, I did.
A cash flow model, you've got these block.
We work with people in care homes, Alan. We work with people in care homes. I built one the other week, 93.
You're 93 and assume you live to 100. So you've literally got these
I killed her at like 110 because I'm not going to make that guesstimate.
The years are like...
the years. It takes up the whole page. So you've got... And even then he was worried about what if inflation goes up? We're going, mate, if you treble inflation and you've got no return whatsoever, you're still going to be okay.
Yeah.
He died the next year.
Jesus.
He was
right.
Well planned.
Right.
All right, next point, very quick. Sorry, go on, Nick.
I've done longevity. So yes, Ultra, sorry, mate. Your what's it called? What's your thing?
It's a quick advertisement. Bell goes off.
Here we go.
It's my conference, Humans Under Management. I've launched the tickets. HUM Corner. I've launched the tickets for London and South Africa. If anyone from the UK wants to come out to the South African event, you have a free ticket. Quite a few people have taken me up on that offer. It's a lovely trip, lovely work event. And the London one is on the 12th of November. So check out the website, humansundermanagement.com. I launched tickets, I think, a week and a bit ago, and I think we sold about 180. We've got to sell 400. That's the number. So we're on it. Back to you,
Hang on,
Nicholas.
Nick and I have both been out there as international keynote speakers. When
You both have, yes.
When you're inviting our correspondent from Limerick.
I know. I'm waiting for the...
Carl doesn't even come to London anymore.
Every year this comes up, this conversation.
Yeah.
Every year.
And every year he folds at some stage. He goes, yeah, I'll get you over.
Next year, Carl.
No, he won't.
Did you boys enjoy your time in Cape Town?
It was all right.
It's okay.
What? Myself and Nick aren't sure about what happened with you guys. Do you remember?
The food and wine is lovely, and the company was lovely. South Africa's got its issues. Let's leave it at that.
Yeah, sure. But it's an amazing place. Alan, did you enjoy your time there?
It's amazing. What do you call that wine place we went to?
Oh, Graf.
Graf Wine Reserve.
Stellenbosch.
Yeah, beautiful. One
Yeah,
of the
it's sort
finest
of-
places I've ever been to. Very nice.
Yeah, when you go there, it's like one of your best days of the year for sure. All right, moving on. Thank you very much, everyone. Check it out. Thank you. Alan, over to you. Vanguard. Friends
of the podcast, keep it at that for the moment. Vanguard, well known to everyone else. I just happened to know... I just happened to come across this thing the other day. Vanguard have got effective, I think they call it a volatility hub. I don't know if anyone's come across this or seen this, but there are situations where things come up where they've got like client-ready videos, downloads, information, communications that's available for advisors just to go and have a look at. When we go through these periods of volatility, if you want to have an informed opinion about, for example, tariffs. None of us knew really much about tariffs, but they've got a very sort of thoughtful, summarized version that could be used in language that a client would understand. We've got examples of that for free for advisors. A link to it is in the show notes. I found it quite useful, quite interesting, quite helpful. That was it.
Good stuff. And Vanguard do a lot of good stuff for advisors, actually. It's quite a good resource to lean on. Okay.
Just final point on that, Nick. You do need to actually sign up and subscribe. I'd recommend doing it because they have a load of other different resources. So fill in their sort of sign up thing.
Okay. So TRAPist, when you go onto that website, you'll find a box pops up and you have to put your name and your surname in and your email address. Might ask for your company name, that kind of stuff. You need to log in. Okay, very good, Anne. Thank God you're here. Right, Wodge, podcast YouTube creators.
Yeah, so I'm in the Meta studio here today, but I was doing another interview for our third act series, and I found a place. I've put a link in the show notes to it. Just if anybody needs a studio in Dublin, it was a really cool spot. And the reason I kind of mention it is I know Alan has literally just fresh out of the box a new episode for the Bulletproof Entrepreneur.
You guys run other podcasts,
award-winning podcast. Huh?
You both run other podcasts.
I don't. No. I'm doing a couple of. Yeah,
okay.
The third act is just for clients, clients' stories. Okay. But Alan's gone into a new studio, and that interview you did with that guy was absolutely outstanding. He is seriously impressive.
Thank you, Graham Godfrey. Yeah,
he really is, and he just a great story. And like people telling stories is just such a great way of extolling the virtues of what we're trying to do here, and it's much more interesting than anything else. And my point here is there are so many studios available. And I think the studio, I priced up a couple of them, and some were ridiculous prices.
Yeah.
I got an hour for 300 quid. Like you can do this, and I'm sure they would have given us great value if we took it for a day or something like that. You can do this stuff. You can start producing your own content. Do not let it hold you back. I don't see enough of it. I don't see enough financial planners, getting stories told or trying to even tell the story of their own business. And I promise you, it's look at the success of this podcast. I mean, it's so amateurish, and people, tune in regularly. It is. That's probably part of the charm of it. But just go and do it, folks. Just go and do it.
You make a great
shambles.
You make a great point, actually, and you're right. So I've had this other podcast going for about the same time as we've been running Trap, and it's always been like this. It's been Riverside video recordings, and it's been fine. And then I took a break from it for a couple of months, and I was just thinking, maybe it's like Nick and Andy, as you know, apparently they also had podcasts, one more successful than the other, possibly, but who am I to say?
Thank you.
I was on both of them.
Nice.
Yeah. Which explains quite a bit.
Hence they're over.
But I thought, no, I'm going to go again, but I'm going to up the stakes a bit. So I found it's actually just near where I live, and it's in central London, a professional podcast studio, and it's a nice young guy. It's his business, and he set it all up, and the costs are actually a little bit lower than you've just mentioned there in Dublin. So it's going to cost more than what we're doing here, but immediately the quality, even my harshest critics have said, it just looks like a proper podcast. You're in a proper studio with real cameras and proper lights and stuff. And honestly, for the sake of a few £100, you could go to one of these places and interview a client, interview your staff, or just do a piece to camera. They've got all the teleprompter stuff. You could create, in an afternoon, you could create a ton of really high quality video content. You've got to have it sort of edited and stuff afterwards. But I 100% agree with you, Carl. The world is expecting more high quality, professionally produced content. It's hard for us because geographically we're spread apart. But these podcasts that people get in a studio properly.
The bar's been rising, isn't it? The last
bar
few
is
years.
rising. There's so much.
And a lot more
content
companies
out there.
are offering it to even rock up to your office with a whole studio, set it up, podcast studio. Yeah, it is.
And if you just do a few, you'll just get into some sort of flow, and it does not have to be perfect. And I know we had James Shack on as a guest on our podcast, and he's what we should all be striving for. But it doesn't have to be as good as his stuff. You can develop into it. And exactly like you were saying, Alan, I'm doing the third act series, and it is to talk about. I hadn't listened to your one in a little while. I went, third act. I ask very similar questions that Alan asks in his podcast. I wonder where I got those ideas from, right? so this goes back to the point is there's no one inventing anything here. This is get your inspiration.
Yeah, there's nothing new under the sun.
Take what will work for you and go and do it. Because I was coming out going, do you know what? Wouldn't it be really great for, like, obviously we've got a few private client managers now, and maybe if they could tell their story, and that might be a little bit of a, when you on our website, you might be able to click into a video and hear about, I'm married and I have 2 kids and I want, because they're all like, young dynamic folks, and I think telling our clients a little bit about the people behind the brand or the logo, I think that'd be really cool. There's just 2 ideas, right? Just interview some of your existing clients and interview some of your team. And this is so easy to do. You just have to have a little bit of the bottle be to do the first few of them. I remember the first couple of Trap podcasts, I used to sit down and actually prepare for them. And I'd say...
Those were the days.
The memories.
Yeah. Long time ago.
And now...
Don't watch Trap 1, anyone.
These are my
don't
notes
Trap
for
1.
today. Right, so...
Actually,
you just get
all,
more and more confident. And,
Yeah, there is no excuse. Just a quick. I think it's reasonable to do a quick shout out to a company called Doc Vinci, who I think are part of the Next Gen, who are also friends of the podcast Next Gen kind of community network. They've got a program available for advisors, and they will. You either go to a studio where they are in the north somewhere, or potentially come to your office. Again, pay a few quid, and they will do a full day's recording for you, then splice it and dice it into multiple smaller edits. So for the sake of a few £100, really, there is no excuse for anyone. So I wondered when I saw that point coming up, I thought, what is he on about? But you make a very good point, Mr. Witcher. Thank you.
I'll check out your new
being nice to each other.
Not last long.
Moving on, because we're already at 33 minutes. God help us. I've got my longevity point, so it's Ultra and this Omaha guy. What's his name?
Well, again, this follows along from the longevity point. Mr. Warren Buffett, who's created 99% of his net worth after the age of 50. Anyway, it was his annual general meeting last Saturday in Omaha, Nebraska. We knew a few people that went there. He's currently 94 and basically he's retiring this year. He's retiring when his company's doing incredibly well. He's put it in a superb position. It's absolutely smashed the S&P since 1965. He would have been the richest man in the world now by an absolute mile had he not given the bulk of his assets away to a charitable foundation over the last few years. He's still individually worth about 170 billion, but he would have been worth close to 400 billion if he didn't give his money away to his charitable foundation. So I'm halfway through watching the Berkshire Hathaway annual general meeting, so we'll probably discuss him and that at the next Trap show. That's it really. So Buffett's retiring at the end of the year. He's passing over to Greg Abel, who's been his sort of understudy. Or
Greg Abel. Was it Greg Abel? He's about 70 himself, so passing over to the youngster.
Yeah, I think he's been at Berkshire for 35 years or something. Yeah. So that's it. It's they're part of the $1 trillion club. Berkshire now is worth 1.16 trillion. The performance of the last 3 months has been incredible compared to its sort of peers. Anyway, it's a superb company, superb businessman. He's on my wall. So my idols stare over me as I talk bullshit to you guys. Yeah, he's been a big influence for me. Anyway, moving
I
on.
think you're on his wall as well, Andy.
Yes, I think I am.
Oh my God, let's leave that
I'll be
alone.
checking as he passes.
Okay, right. So, storyteller.
Just a quick one, and forgive me, I have mentioned this before, and they probably should be sponsoring this podcast because I've mentioned it. But Haley Rabbits at Verve Company got in touch with me again recently just to remind us that that company offers 3 different programs for advisors. One is called Consider, which is their mini program that lasts about 7 weeks for those people who are thinking about starting out on their own as advisors but need some support making a decision, do I go directly authorized, appointed rep, etc., which is a question that does get raised. Their other program is called Build, which is a full program, 12 weeks long, for those who have taken the plunge, have set up. Usually in the first year or so of trading, could look for some support, guidance, and mentoring. And they have their third program called Grow, which is a new program for any stage of business, looking to grow your business, perhaps recruit staff, consider succession planning, all that sort of thing. They've got cohorts starting in June and September. It is free. It's sponsored
It's free,
by,
yeah. I was going to say,
by
I've heard
external
great things about
providers. But as I say, I have mentioned it a few times before, but this podcast is all about providing help, resource, support, pointing people in the right direction. We all get individual messages from advisors from time to time saying, I'm at a crossroads, I'm not quite sure what to do, thinking of starting off on my own and la la la. So there's a ready-made cohort of training, support, mentoring available. So there's no excuse. So again, link in the show notes, but Haley at Verve will be able
That's outstanding. There is no such resource here.
It's a brilliant incubator, yeah.
I think,
well done.
I think some of the Irish youngsters should be looking towards that program because, other than the technical tax pieces and that kind of stuff, I think there's a lot of generic training to be done.
There is. And I've just got a secondary point, related but unrelated. I get various sort of communications, DMs, etc., from advisors, kind of almost, how can I put it, sort of trapped in an organization that doesn't necessarily represent their own values. And it's frustrating. We might even talk about this a little bit later on in the TRAPist question, or a version of this. So just so you know, I've spoken to one firm in particular recently, and there's a few others who are actively, good firm, top level, proper financial planning firm in and around London Southeast. Obviously, this is geographic dependent, who are actively recruiting for those kind of early stage financial planners, trainee financial planners, kind of will inherit a book of really good clients over time. So if that is you, if you're looking to sort of get into a great company, because they're like hen's teeth, getting a place in a really good, proper, full fat financial planning company is quite rare. And I often thought, by the way, that we should have our own TRAP jobs board or something. If we could just have an ability to almost screen companies that we think are great, proper financial planning companies, and those looking to find those positions, because it's just really hard on the face of it. Every company says, yeah, we do proper financial planning, but the reality is probably quite a bit different, certainly the feedback I've got. So if anyone is in that space and thinks, I'd love to speak to a company who's actively recruiting for a kind of early stage financial planner, DM me on LinkedIn. I'll put you in contact with the people who are looking for that type of recruit.
What a lovely offer. Good stuff. Great stuff. Great stuff. Okay, final topical tidbit. 38 minutes, 50 seconds in. Ultra.
Yes, so on the day this comes out, the Bank of England will be meeting to decide what they're going to be doing with interest rates, and the odds are on for it to be declining. It's currently 4.5%. It's going to be moving down to 4.25%. The mortgage market has factored in a heavy decline of rates this year. You can get a lot of 2 and 5 year fixed rate mortgages now starting with a 3. And there's about 1 million people coming up for renewal on their mortgages every year. So obviously when the rate was a lot higher, this had a massive impact for people. But now the thought is that interest rates are going to plummet this year, and they're saying that they're going to plummet all around the world. But anyway, I'm just looking at the UK numbers. So, nothing hugely more to say about that. Does this crop up with your clients, gents? Do you keep an eye on high-level rates? Any thoughts on this?
not to any great. Clients bring it up if they've got mortgages that are on fixed rates. Then they'll say, crikey, we had a 5-year fixed, and it's at 2.29, and looking around now, it's like maybe like 4% or something. So you change the cap. But no, I don't particularly follow it to any great degree. It's not particularly exciting.
Yeah, sure.
Well,
it's a
normalizing of interest rates, isn't it? Interest rates. We had 15 years of practically 0% interest rates.
Stupid money. But in hindsight,
everyone got used to it.
Correct.
The world is kind of just somewhat normalizing.
It's quite. There's a link in the show notes. So they've got a whole stuff about inflation and all the numbers that the amount of mortgages that are coming, and they've got a long-term interest rate graph of it from 1985. Yeah, there's this massive chunk in the middle of it just hitting the floor, dropping down, and then shooting straight back up to a level that when it dropped down in 2008 or 2009. Anyway, that's it. Nothing hugely interesting to finish off Topical Titbits. Over to you.
Riveting.
Nicholas.
Okay,
Bring back PRSA Corner.
Thank you, Trap. Okay, so let's now move on to what many people call the meat and potatoes of the Real Advisor podcast. This is where we get our teeth into something juicy and give it a damn good thrashing. And the thrashing, we've talked around this subject, I think, before in Topical Titbits numerous times. You might have somehow gone into a tangent on it in the meat and potatoes, but this is a meat and potatoes dedicated to Bitcoin and crypto, because it's still going up in value. Bitcoin, apparently, it's becoming more and more a subject for polite discussion. Obviously, in the US, they're adopting it. The US government is looking favorably on Bitcoin. They've got David Sachs as their Bitcoin crypto czar, one of the guys from the All In podcast, a very switched on guy. And I know that in this country there are IFAs now who are looking at it more seriously, and there are resources now to help advisors get up to speed with it. So we've all got varying views on Bitcoin and crypto, because I think they are two different things. But maybe you can educate me. I'm not going to. I'll keep my powder dry. But I think you might have an idea. Who wants? Again, we've done bugger all preparation for this, really, in terms of any kind of structure. I know, Alan, you've been on a podcast. There was an envelope being opened recently, and you had to be there for it. No, sorry, you were on a podcast recently, weren't you? Maybe you want to lead
busy
off.
Opening another envelope that night, so we couldn't do it.
All right, okay.
No, I was on it. I was on it. So look, I'm just.
Don't get stroppy.
I've got complete trepidation of this very subject, the B word. And I'm looking at Crypto Carl here, and I noticed he switched off his camera a minute ago. I thought he just left the room, because this is
I just had a little bit of sick in my mouth. So.
Slightly contentious subject, it would appear, amongst the trap community. But I've actually have done a little bit of preparation for this, and I think it's a worthy subject to have a 10 or 15 minute discussion and debate. And just to start off with, just to be clear, I'm not here in any way to promote Bitcoin as an investment or a way of saving or investing or sort of removing yourself from the sort of centralized government control potential. I'm just here to suggest that we all might want to learn more and may wish to educate ourselves. So that's the starting point, just to make that clear. I'm not pushing Bitcoin in any way, but I am pushing an education and learning. Bottom line, in terms of facts and statistics, this is now around about $2 trillion
market cap.
It's not small. It's been around for over 15 years. And actually, let me make this very clear as well, because Nick, just to clarify on your point, Bitcoin is not crypto. Crypto is not Bitcoin. The whole point is Bitcoin is the only one which is absolutely decentralized. There's no company, there's no CEO, there's no founder, there's no one who can control or the creation or the production. So it's a decentralized protocol, piece of technology, which has got a value. Just to be clear, there are only ever going to be 21 million Bitcoins created. I think there's already been 19 million mined. So
there's been a lot lost, Alan, along the way.
We talked about that guy. Where was he? Wales or something? Yes, there's been a lot of people have lost them.
And the founder's got $1 million in his own wallet that people can see public access to, as in Yoshi Yakamoto, whatever he's called.
Yeah. So there's all that sort of thing. So the point being, it is a finite resource, and if there's demand for something in a finite resource, then it does push the price up. additional statistics. 12% of the UK population own crypto, of which there are 4 million people in the UK who own Bitcoin in some degree or another. It might be small amounts, might be medium, might be large amounts, but there are 4 million people. I'd imagine pro rata, the numbers be broadly similar in Ireland and other parts of the world. Big organizations, again, in the US, like BlackRock, like Fidelity, like some other huge multi-billion, trillion organizations are embracing, to one degree or another, the concept of Bitcoin. Again, repeated,
Could have been anything that.
not shit coins, not made up tokens, but specifically Bitcoin as opposed to crypto. And here's the other thing, just sharing personal experience. Our clients are beginning to ask us, and some serious clients. You know, we've got quite a few, like we all have. We've got smart, intelligent, often entrepreneurs, business owners, and you move in those circles, and the conversation comes up quite regularly. We had a recent client conversation with a client who wanted to allocate, in monetary terms, quite a large sum of money into Bitcoin. In his overall percentage of wealth, relatively small, but he wanted to allocate. So people are beginning to ask more about it. And I personally don't think that, I don't know anything about it. It's unregulated. I don't think that that is the only answer that you can give. It's important, I think, for people to at least know a bit about it and educate themselves. I'd like to think in my company, we've always been quite innovative. We were very early adopters of things like cash flow planning before Voyant even came to the UK. Our investment proposition, platforms, passive. Nowadays AI technology. So this is something which is new and innovative, and I quite like being an organization, a company that's alive to emerging changes, interests, things that our clients are talking about, and at the very least informing myself about it. So that's kind of the opening salvo. Now, just to be clear, Bitcoin specifically is unregulated in the UK. Even if you wanted to, you couldn't recommend or advise upon it. And incredibly, there aren't even ETFs. The BlackRock ETF available in the US isn't generally available in the UK. And from what I gather, the FCA so far seem to be quite anti the whole thing. And the interesting thing is that by the FCA's approach to being completely unregulated, and so far all the communications I've seen from the FCA, they bundle Bitcoin and crypto together. And guess what? You can go out and buy like a 3 times leveraged MicroStrategy stock, for example, which is the company that invests predominantly in Bitcoin. You can buy that as a UK investor, but you can't buy Bitcoin. So that, one is far more risky, volatile than the other, arguably. So I think at some point we will follow the US. As you say, Nick, the smart people in the US, from David Sachs, Howard Lutnick, they're all talking about whether it's a strategic Bitcoin reserve. But the point is, at senior level in biggest economy in the world, it's on the agenda. At some point, the UK has to embrace
stable coins are
what that
ruin
looks
as well.
like. What that looks like yet to be determined. But I'd rather be somewhat ahead of the curve than just trying to sort of catch up as and when the FCA makes some big pronouncement. There's loads of different reasons that you might want to consider learning about Bitcoin or talking about it. And we don't have time to talk about all the various levels. The number one reason people get into Bitcoin is because the number keeps going up. They look at it and go, wow, average annual return is about 60%. Yes, it's volatile, but a 200-day moving average, the chart just basically goes up. There's lots of volatility.
What is driving that return? What is driving it?
Well, demand. It must be in a finite supply of something. People are buying it. When I think the BlackRock one is the most successful ETF ever launched. Something so the BlackRock themselves are buying.
You mean in terms of new numbers going into it? New numbers,
AUM.
That might be correct. Yeah,
yeah,
I'm not surprised by that.
And now there's a bunch of others. I think Fidelity have just there's quite a lot now who are offering Bitcoin.
Just on the ETF
ETFs.
point, do we think that's going to happen on the horizon? And Carl, are you dictated by what Europe does to launch the ETF in Ireland?
Yes, so the Irish, the central bank have to approve they have to say that, this is now a regulated product. So, but
let me just quote you, and then this is all hypothetical, but historically, just as a matter of interest, I've often talked in this podcast. We've all got a version or a view of it, which is like the concept of the investment playpen. You buy global equities for the family fortress, reliable, but you're allowed to have a bit of a punt on the side, whether it's 1%, 3%, 5% or something of your assets, on the basis that if you lost it all, it wasn't going to change too much, and if you got a 10x return, it would be happy days. Yeah. But there's some statistics published recently, and just to give you an example, and this is talking about a 60-40 portfolio over the last 10 years. 60-40 has done on average about 6.2% a year over the last 10 years. If you started with if you were an advisor and you had £10 million of client assets, that 6.2% would over 10 years turn up to from 10 million to 18.3 million. If you had have allocated 1% to Bitcoin, the return moves from 6.26 to 8.15, and the 18 million to 22 million. 5% to Bitcoin, the return goes from, as I say, 6.26 to 14.78.
Yeah, Alan, with respect, those numbers like account for a massive increase in Bitcoin in the recent past. So that's like picking and choosing, time frames. That
you could just add Tesla stock there as well, couldn't you? Or Nvidian, or
no, 100%. I'm just saying if someone had and some of our clients have had
Nvidian,
we don't manage
Tesla.
it.
Okay.
But had they allocated a 1%, a 2% allocation of their wealth to this,
and rode it through all the cycles of extreme pull downs, which
Correct.
again humans have found to not be able to do. But I get the maths. I get your point.
Well, again, on that, again, I'm just.
But what can we do as regulated advisors? We can't say to someone, we can have discussions with them, of course. Okay, here's what I'm thinking, Andy. Okay, why are you thinking that? Well, does that make sense? Yeah, that seems a bit punchy. That could make sense if you found somewhere to access it. We can't ever say, this is the platform, this is the provider, this is the fund, unless it becomes a regulated product packaged in a regulated entity, unit trust, or ETF.
Yeah, so, I agree, and I think one of our roles should be for the client who says, whatever you're doing, I'm going to go and buy something because everyone I speak to, the thing's going up. You want to be able to say, by all means, do it, but if you do, don't buy shitcoin. Here's a few key points that you should bear in mind. This is 10 foot high letters. This is not advice. So the last point I'll just say,
you wouldn't even do that. You just have a conversation.
A conversation. Just say there's just. But I would encourage anyone just to learn a bit more, because it's basically this is the story about money, what the purpose of money is, and the fact that the situation we are in all around the world. Yeah. It's a new version of money that can't be diluted, attacked, and all the rest. Obviously, it's got lots of applications around the world that aren't so relevant. And I would say for most of our clients, it is less relevant because, as Carl's just pointed out, you can transfer money anywhere in the world quickly using Revolut or whatever. Most are invested in equities, so they're at least got some protection against inflation.
You can buy Bitcoin via Revolut as well.
You can.
There you go.
All I would say was I mentioned this in a past episode. I think I posted a link to it. The video that Joe Bryan has created called "What's the Problem?" And that video it just starts with it's not trying to promote Bitcoin. It's saying these are the problems with the economy, and again, story for another time. There's loads of problems with the economy. Maybe we're sheltered from it. Maybe we deal with affluent clients, but there are loads of problems. So watch the video by Joe Bryant called "What's the Problem?" and read a book. Read "Broken Money" by Lynn Olden.
Alan, I did watch it though, and it's interesting and it's well put together, but it's also from the outset it's clear the conclusion that we're going to come to, and I'm not sure things are as broken as the video outlines, right? That it's as I don't know, draconian an outcome that we're going to be facing. I'm slagged off every time this comes up, and people slag me off and say I don't have any knowledge about it at all. I've done as much reading as anybody else on this thing, right?
Probably more, Carl. Not taking the piss. Probably more.
So I am, as MD of Metas Ireland, it's my duty to tell my clients what I think they should be investing in. Now, from the outset, I will say, go back to your playpen thing. I have had this discussion with people who have shitloads of money and want to have a playpen. I'm like, we can tell you how to work that if you're interested in Bitcoin or cryptocurrency. So we do have those conversations.
Can't not.
But generally speaking, and I'll just make these few points, right? And some of them have already been mentioned. I have found it in the Trump's first 100 days more difficult or more common that people out there, not necessarily our clients, but people out there are much more frazzled about investment markets and their investments going down or their pension funds going down, right? Now, that's in a period of this wasn't real volatility at all. This was just a little bump in the road. And yet we're finding people, really, really nervous. And I know of a client whose son was invested with Bitcoin and he was worth an absolute load of money and came in to see me. And I said, he wanted to buy a house. And I said, well, look, this is easy peasy. Sell your Bitcoin and buy your house and you're still left with some of your Bitcoin. You get that much of it. He didn't do any of it. It then absolutely tanked and he lost most of his money and then he sold out. And the guy is, well, at the time was I've told this story before, was depressed. So the volatility, most investors are not ready for this level of volatility and to lose this level of money if it's with a significant amount of their money.
Brutal.
So therefore, for me, as the MD of Metis Ireland, putting together client investment portfolios, I don't think it's appropriate because I don't think we will manage to make all of our clients stay in their seats. Okay,
Carl, just to be clear, as I said right at the beginning, I'm not in any way promoting this. I couldn't even if I wanted to.
Yeah, but
I'm just talking about being educated and informed, so we can have an intelligent discussion with the client.
Yeah.
And I accept that point. I suppose what I'm doing is I'm defending myself against the people who are online and in our comments, right? They do go, Carl Widger doesn't know what he's talking about, right? So today I'm putting a marker in the ground saying I do. But I have, that's just my way of doing it. Is like, I don't really understand it. But I tell you what I don't understand, right? Satoshi, whatever his name is, right? Andy was talking about, he still has $1 million or whatever. I can't get my head around that shit. Like, I just can't, right? Anyway, that's beside the point. Let me go on because I do want to make sure that I make all these points and let the haters come back then, right? So I don't believe that this is Bitcoin a currency, a cryptocurrency. Right. So is it a currency? So therefore it's not. So I would argue because it does not generate a dividend or income or cash flow that it should not be dictated as an asset class.
Correct.
Because it has no intrinsic value.
Mm-hmm. Correct.
Okay.
That's fine. And that's true. But
no, I would argue the same.
Gold is not an asset class.
I was just going to say, right. I would not. So that's why we would not put gold into our client portfolios. Right. So, and I'm comfortable saying gold should not be in our portfolios, even though gold has just hit all-time highs.
Any commodity. Exactly. No natural income. Not real asset class.
So that's my second point, right? I won't labor these points, right? The how regulation and how mainstream central banks deal with this, how taxation evolves with this, I don't think anybody knows what that looks like. And there certainly could be or should be or might be fightbacks, right, from the mainstream. Whether that's good or bad, I don't know. But it could make some people's holdings worth a lot less than what they are now. Now, Andy, you did mention stablecoin, right? So when you've got the likes of the Collison brothers in Stripe buying Bridge, I think they were called, for 1.1 billion in order to be able to accept and to do payments over stablecoin. Now you're starting to see, this is stepping into mainstream. You mentioned David Sachs, and his job is to be the crypto czar in Trump's government. However, if you read a lot about that, they're not actually buying up shitloads of Bitcoin. They're just taking the stuff that they've seized from criminals, and that's what they're putting into their bank. So they're not actually active buyers, as far as I'm aware, of cryptocurrency. Another one, right? So if people are buying Bitcoins directly, right? We laughed and joked about that Egypt who lost his thing, the keys in his laptop, and it's in a dump somewhere.
His
and
hard drive, yeah.
Right?
Hard drive.
There you go, right? Do our clients, right? What do we always say about our clients? You will have segregated assets. If anything goes wrong, it's never going to be a Lehman Brothers where we did not know where your assets were. You'll always have a segregated account, and we'll always be able to know exactly where your money is. And then my final point, and I think this is probably the most important, a little bit like AI. The great companies of the world that we encourage all of our clients to invest in, those great companies are doing so much in AI, that we have no idea how much they're going to do. And we were talking about, medical advancements around AI. That research and development is being done by the great companies of the world. So our clients are getting the benefit of all that R&D in AI. Similarly, you've mentioned BlackRock, but there's loads of other ones. So if you want to talk about the great companies that people are investing in, so the Stripe guys, right? They're investing in stablecoin. Patrick Collison now has gone on the board of Meta. Is that good? I don't think it's good, but anyway, my point is these guys are all talking about the same things, right? So our clients are investing in the great companies of the world in what has always worked. And the great companies of the world make progress by acting on human ingenuity. So therefore...
And changing course, yeah.
Yeah, if exactly, right? If we need to pivot, or if the great companies of the world need to pivot, our clients are all going to ride on the back of that, I believe. So these are all the reasons why I don't think they should be part of the portfolios. I'm totally okay. It's a little bit like if you want to think that active fund managers are the way to go, right? I'm okay. I will be totally respectful of what your views are. But I'm yet to be convinced. I'm going to sit on the fence. I'm not going to be an early adopter on this. And if we have to pivot and I go, do you know what? This is I'm very comfortable with all of this for all of these reasons, then I will. But for now, not for me.
That's a very, very considered response, Carl. Thank you for that. Andrew.
Okay, I'll throw in a couple of 2 pence here. It is going to be interesting what the regulator does around allowing these to be included into portfolios, and if and when that comes, if ever. It'll be quite interesting to see how Europe deal with it, and then the UK. Obviously, the US has led. I knew about Bitcoin in, I think, 2013 when I went to a random meetup in central London, and I've been sort of pushing back.
We can't play that drop again.
Can't play the drop again. I've been pushing back on it.
He is Satoshi.
I've been pushing.
We found him.
Yeah. I've been pushing back on it since 2013. It's not a real asset class. Doesn't make sense. Me and Alan have spoken about 100 times over the last 12 years. We've sent each other screenshots. Is Bitcoin worth $1,000 a coin? No, don't. It's too expensive, Andy. It's too expensive, Alan. It's never going to work. Another time at 3,500, we were like, surely we're going to go all in now. No, not all in, just a punt. Anyway, that happens all the freaking time. So in recent times, I've become more pro Bitcoin in terms of the interest in it around the world, its limited supply, it being the digital gold. Bitcoin at the moment is 2 trillion. The total value of all crypto is about 3 trillion. I think the other trillion is guff. Yes, I understand what a real asset class is. The whole reason why you get capital returns is because it produces a natural income. And the only way you get that is from businesses and property. So yeah, I'm totally agreeing on that. I'm definitely going to see a headline within my lifetime. Not definitely, anything could happen, but I'm going to see a headline within my lifetime that Bitcoin it will be worth $1 million a coin. We're at 100,000 at the moment. When it is worth $1 million a coin, the market cap is about 21 trillion. There's going to be an insane amount of fluctuation leading up to that. There's 21 trillion in circulation. The founder owns 1 million. So when Bitcoin is at 1 million, the founder that nobody knows, this fictitious person,
the Wizard of Oz,
will be worth $1 trillion. About 3 or 4 trillion has been lost. So we're now down to, keep it simple, about 16 trillion in circulation that will have a price on it, that will have an insane market cap. Still not a real asset class. Obviously will never be advising clients to invest in it. I obviously can't as a regulated person, even when I am able to. Again, we'll cross that bridge when we get there. So there's a few moving parts to it. I do have conversations with clients about it. Quite a few of my clients own it. It's in the background. It's on their voyant plans and balance sheets, depending how big it is. I've had a few clients that have had 6 figures in it years ago, so that those numbers are now a bit more punchy. I'm working on taking on a new client that is a VC in the crypto space. So I'm exposed to it all the time, as all of us are. Yeah, it sounds insane. These just words, connected together. So yeah, I've become a bit more pro Bitcoin as digital gold, not a real asset class in recent times. I've read up more about it. So I agree with a lot of the points there.
So you like it more now because the value of it's gone up, but it hasn't changed in any way, has it?
Well, Nick, I've been loosely following the story for 12 years. What do you mean following something for 12 years? And it's sort of, I'm going to continue to follow the story. I'm going to follow the price. I'm going to follow the madness that goes along with it. Having conversations with taxi drivers and hairdressers, all the usual stuff. Anyway, What's your thoughts on it, Nicholas?
I still don't get it. I'm sorry, it must be me. I don't get it. I think it's the greater fool theory writ large, and it is taxi drivers selling the Gartmore Tech Tornado Fund to punters in 1999. This Yakasimi Sushi, whatever his name is, it's just all. It's like clouds going by with wizards on top. I can see the utility of a system that enables frictionless
technology
transfer of
behind
money.
it. The technology behind it,
and it's not fiat money, so the government can't
Revolut app.
can't print more Bitcoin. I can see. Okay, that might.
But Nick, I really thought that you would embrace
it. It's
it.
just a means of purchasing it. That's all it is. It's a bit of currency. It has no
Yeah,
value.
we thought you would be the right off-grid,
Well, it's just
removing fiat currency, man.
You know how much the
Nick.
pound of the dollar has been devalued by this constant creation of new money, the money supply, printing money. So clearly the pound in your pocket, the euro in your pocket, is worth less, continues to be worth less and less and less. Inflation.
Yeah, you lose 90% of it over 30 years. Yeah, we know that.
Yeah, so
How
and that will
can
continue
you
to
say-
be.
Hold on, if the value of your Bitcoins are going through the roof, then if you want to buy something with Bitcoin, the price of the thing you're buying will go up.
Yeah, it's insanely volatile.
Exactly.
You could walk into a shop and go, I like those trainers, 50 quid. By the time you get to the till, it's like 68 quid.
Exactly.
What do you mean?
That will break the world economy.
That's why we need stable coins and using the technology behind it.
But that's why Bitcoin is a load of
You
bollocks.
guys have read the book as well. The
And
natural
that's
order
closed the
is
meat and potatoes for this episode.
natural order is deflation, isn't it? Technology improves things. Things could go down in price in reality, but they continue to go up in price because there's more and more money chasing the same fixed supply of goods.
But go into a shop and buy a loaf of bread, and by the time you walk into the shop and walk back out,
What do you mean if
by
you're buying it in
25%?
Bitcoin or you're buying it you're converting to fiat? Do you mean the price continues to go up as we know through inflation in denominated in fiat
We're
currency?
just saying about the volatility of something like Bitcoin, Alan. If we
right,
in the
fine,
UK adopted Bitcoin tomorrow as the only currency you could buy anything
I see what you
in,
mean, yeah.
It would be total carnage. You'd be like, I'm going to get a new car in October.
And the car
It's
is
60
a perfect,
grand.
great example.
Now it's 112
Yeah,
or
exactly.
whatever, or it's gone down to 30.
Yeah.
It would just be unsustainable.
Yeah, it is. As it's only 15 years old, so there's a lot of volatility in it, and the volatility will reduce over time. I think this is quite fair.
I mean, and this mining thing, just to throw it again. So when Bitcoin first launched, to connect all the trades, you needed insane.
Did you follow it when it first launched?
Let me just fucking finish. In order for these trades to be completed, you needed an insane amount of computing power to confirm all these trades on the ledger. Now, I think they call it the halving, don't they, Alan? So every time it halves, the computing power
Every
needed
4
to
years, is it?
connect these trades doubles.
Yeah.
So there's been a lot of people that have been involved in this greatest thing to ever happen to the human race, biggest fraud in history, whatever side you sit on. There's been farms and people and teams and thousands and hundreds of thousands of people across the world that have kept this greatest thing to ever happen to the human race, worst fraud in history. There's been a lot of activity around this. So it isn't something to just say, or you might be right, Nick. It might be a load of bollocks, or it might be the greatest thing to ever happen to the human race and the most, innovative thing to ever happen. I like the story behind it. I like the technology behind it. And people that are insanely smart say the person that's created this has created something that is an absolute wonder of technology, which, I'm going to sort of piggyback
But
on
Andy,
their thoughts.
that argument is all joking aside, right? That there's really, really smart people who are saying that this is the best thing ever. There's really inverted commas, really, really smart people, saying that active fund management is the way to go. It just doesn't that does not equals a really good idea.
I'm just saying it's one of the other points amongst many.
I know,
I'm aware enough to think it's the greatest thing that humans ever create, the biggest fraud in history.
The bit that I'm challenged by, I suppose the bit that's pissing me off, being frank, right, is that if you say to the I'm okay with listening to the pros of Bitcoin. I think Alan put the case forward for knowing about it, learning about it, and just updating yourself on it really well. I think that's a good idea. But if I then say, well, I have done all that research and I've decided it's not for me, well, I'm an idiot. And I like
Carl, I 100% agree with you on that, and I have raised that point with various people in this Bitcoin community that just, I mean, it put me off. I mean, I know Andy, as you would expect, was deep in the weeds decades ago. I definitely wasn't, and one of the reasons I wasn't because I wasn't buying it. You're against Bitcoin until you're for it, and I was very much against it. And oh my God, anything on Twitter or something, you got absolutely destroyed about. Have fun staying poor. You're an idiot because you don't understand it. And it's a very aggressive tone that these sort of, maximalists, as they're called, all in on Bitcoin people, very negative towards anyone who says, well, I don't quite really understand it very well. You dumb.
But that's common in any movement. You get the extremes, you get the middle people, and you get the dabblers. So
that's why I really like Joe Bryan's video, because he himself is a very humble guy, and he just says, look, here's the thing. And by the way, you watch the end of that video, it's 30 minutes long. If you don't agree with it, you don't agree with it. You've invested 30 minutes of your time. It's not the end of the world. Look, move on. As they say, everyone will buy Bitcoin at the price they deserve.
Okay, we should give a mention to the Bitcoin IFA, the bitcoinifa.com. It was Daniel Parkinson's podcast that you went on, Alan. He's got a very nice website. He's produced a crib sheet PDF, 6 or 7 pages aimed at advisors explaining Bitcoin. I did read it before this shouting match began. Still can't say I was any particularly the wiser at the end of it, but good effort to him. Crack on if you want to educate the IFAs, and you're doing something valuable, throwing something out there into the universe, and you will get your due reward. I think this thing is a conflation of the get-rich-quick brigade, a massive dose of FOMO, and I think it's going to end in tears. Okay, that's my view on it.
Charlie Munger called it rat poison squared. One of the show co-hosts in America called it everything you don't know about money combined with everything you don't understand about technology. But anyway, there's different. But Alan, just on that guy, that Bitcoin IFA, I mean, what's his purpose? What's he up to?
Very interesting guy. You can watch podcast interview with yours truly and a couple of other people that have had on it. But he's Dan Parkinson. He's a kind of career changer guy, but he's got like a personal visceral experience. He was living in Lebanon for a period of time, so that country, the currency, I can't remember the numbers. It went from what to the dollar to like 100,000 to the dollar in the space of a couple of weeks, and that was the classic time. You would order. You pay for your food. It's like, Germany, 1930s, pay for your food before you've had it because the price will go up in an hour or two. So and of course, exactly, the banks were closing down. You couldn't get access to your currency and your money. So Bitcoin was a bit of a lifesaver. There's a whole lot of other issues for people living in countries where there's a very oppressive regime. And if you get money sent to you and you've been sort of against the government, they'll come after you. They'll come after the people who've sent you the money. So Dan's experience was there when he first really began to open his eyes to this thing that the governments and other people can't get control of it, and it is more stable than some of these other currencies. Dan came back, went to the UK, trained as an advisor, qualified as an advisor, and I won't say the name of the company, but one of the big kind of national brands. Didn't enjoy his time there, just to put it mildly, in terms of what he was able to offer to his clients. And quite brave, actually, stepped away from it all and said, because he's very passionate about Bitcoin, but he wants to be an educator. He wants to help the advisory community. He's not ramming it down your throat, but he's saying, here's some things you might not know, which may help you with your relationships with your clients now and in the future. And yes, there's quite a lot of useful material. He has got a podcast, and he's also offering, and I'll be careful what I promise, but he's offering a free workshop. You'll come into your company team, spend a couple of hours, and just share this stuff, just so that your team are a bit more informed should a client ask you about it. So,
will he travel to Ireland of interest or Norway?
If Carl pays his flight, I'm sure he will.
Okay, all right.
But, so do check out, as you say, the BitcoinIFA.com. It's good stuff.
Yes, yeah, great stuff.
That's good.
Okay, well, we gave that a good thrashing. I'm sure we're still as equally divided on this as we ever were. And this will be a movable feast, because this will keep on coming up and up and up. So the things change, and we must change with it, I guess. Although I won't. Okay,
when's your birthday, Nick? I'll buy you 1,000th of a Bitcoin.
Yeah, whatever. Great.
Yeah,
Can't wait.
Sats.
Let's now move on to the TRAPist questions part of the show. This is where, there we go. There is Posty. The drop work. She's at the front door with a bulging sack of TRAPist questions. If you want to ask a question of us, TRAPist, do so by the link in the pinned tweet or the pinned X or whatever. Also the so-called show notes, and we will get through them. We're still answering questions from late last year. And today's question, who is this one from? It's quite a nice envelope, this one. It's quite a nice manila envelope, thick paper.
I prefer you not to say his name, Nick, just a heads up.
Well, I don't know. He said, I'm going to say, I said Lewis. I won't say the first letter of his. He said he wants to provide anonymous. I'll just say Lewis. I'm not going to not say the person's name at all. Lewis, with no social hand. This is unbelievable, this one. This will go and have a lie down, make a cup of tea.
Seriously, you're going to read this?
Hi, yeah, I know. Hi there. I have a pressing discussion about. Oh my God! I have a pressing question about risk discussions. I'm a relatively new advisor at 26 years old, and I agree with a lot of the things you say. One thing I have been implementing a lot into my own practice is this discussion of volatility versus risk of low returns. Now, when it comes to the mumbo jumbo questionnaire, we have quite a large one, which we need to use in our. Don't be smutty, which we need to use in our firm. It essentially guides the client away from anything above 70% equities. Yuck. So it's wording like you could lose all of your money. You are willing to take a very high level of risk. I do my educational piece about I'm only a third of the way through. I do my educational piece about what the actual underlying investments means for these high equity portfolios, but it almost feels like I'm arguing with myself after presenting the mumbo jumbo questionnaire results to the client, if that makes sense. Kind of, Lewis. The mumbo jumbo questionnaire has a way of making 60-40 appropriate for most clients. No shit. With its wording, when in reality they have 30-40 years invested in the market. They should be at least 80-20. Correct, Lewis. As you know, we cannot tell the client, no, you're going to take more risk, mate. My question, episode 70, we got to it. My question for you all is, what are the discussions you may have after completing a mumbo jumbo questionnaire where the client select a risk profile which you know is too cautious? I would love to hear how you broach the subject in order to potentially move their thought processes more towards the equity side. We know this is optimal for them, and we are advising, however. Okay. I find it tough after the mumbo jumbo questionnaire has already given them the answer, and going up a risk profile gives them a statement about their investing approach that they don't agree with. For example, you're willing to take a higher level of risk with your money. Do you see the battle I am fighting? ? Okay, last 3 lines. Come back to earth. I want to do the right thing for the client without putting them in an uncomfortable position, confusing them, or to be forceful. However, I can hear Nick already. Yes, you can, Lewis. There would be a lot more uncomfortable discussions 20 years down the line by being too cautious. Nailed it. There you go. Somebody else speak for a little bit while I just go and get my throat lozenges out.
Okay, there's a few moving parts to this. This crops up a lot. When I'm at conferences, I was at a conference last week, and there was 3 advisors, all from the same network, saying how challenging it is with their network, giving them an attitude to risk questionnaire to complete that leads most clients to this mystical 6, 7 out of 10. And then I think the network said the maximum you can nudge them up is 2 points up the 10 scale. And they're like, well, anyway, it doesn't really make sense. I have my own risk questionnaire that I've created that isn't one off the shelf. It's a good starter for clients. I then have a long-winded conversation about proper risk with clients. I've got a whole thing that I go through in different portfolios, different returns, different volatility, annual calendar year returns. Me and Nick, I think, I've got the same thing in relation to that. Nick and I, sorry. How remiss of me. I won't do that at Trap Live, Nicholas. I will be on my best grammatical behaviour. And then my final point on this. I say to them, if you're going to watch anything about investing and risk, I put a video together and I send them a link to a video I put together called the Informed Risk Scale. And then I have a grown-up conversation with them in the initial onboarding process. A lot of people, quite a few clients who have come to me have heard my content, my podcast and stuff. They're all pro global equities anyway. So it's a bit odd. I have to talk. I remember I took on a guy once who said, "Okay, Andy, don't put any bonds in my portfolio. It's got to be 100% global equities." I said, "That's fine." I said, "Just send me an email, just to put it on the file." He said, "The other thing is I want you to look after my mum." I said, "How was your mum?" He said, "She's 85. She's got a few quid as well. So don't put any bonds in her portfolio." And I'm like, okay, now you need to send me a strongly worded email confirming no bonds in your mother portfolio. So sometimes they come to me and I've got to talk them down the return scale. So who's next? Nick, you've done enough talking. Carl and Alan, anything to add?
Was it any chance of answering the question? That was just a big long story about something else.
Go on then, answer the question, mate. Concisely, go.
I'll do it.
Right. All right, Carl.
You're
helping him now, Carl. You're helping him now, Carl. Alan, answer the question concisely. We'll get on to you, Carl.
Right. A couple of things. Well, first of all, when this comes up all the time.
These are my best friends.
They are best friends.
We need to give clients. We have to give clients what they need, not what they want or what the risk questionnaire says. Without that, there is no point in the job you do. If it's a painting by numbers, put your answers to this mumbo jumbo question, and I will give you the outcome rather than say, that's interesting. And then you apply that then. And if you say, take you a 60-40 portfolio or worse, a 40-60 or whatever the risk profile of thing tells you, plug that into your cash flow model, run that over 30 years versus say 100% equity or a 90-10 or something, and then demonstrate that to the client. You say you can do what you want, but here is the long-term impact of that. One grows at, let's say, compound 2% a year more than the other portfolio, and this is where it takes you. And it's all about, and you talk about it in the past, Andy, money is freedom. Money, wealth is freedom. It's options, it's choices, it's generational, it's all the things you can do. So you might, the short-term answer to the question is here, but we need to understand the long-term impact of those choices, and then have the other, the conversation about. So run a cash flow based on those things. And the last thing is, and I will give you credit, Mr. Ultra, on this. This is using words are weapons, framing words and language. So the other thing to say to the client is, do you want a high return portfolio or a low return portfolio? And that's because instead of saying, do you want a high risk or a low risk, which is completely the wrong end of the telescope or whatever, and everyone will say, I'd like a high return portfolio, please. And you say, I can deliver that to you, relatively speaking. Here's the thing, though. It comes with a bit more volatility. Is that okay?
I'm just going to chip in very quickly, final point before Carl. The root cause of this problem is compliance don't understand long-term investing.
Correct.
Yep.
So good luck in trying to convince them about the way we think. We didn't understand long-term investing for X amount of years in this business. It's taken us a lot of untraining to get to where we are in our thoughts now.
Risk versus volatility, one of the biggest lies in our industry.
Carlos.
Cash flow modeling does beautiful colors and shows you exactly where your money is going to come from over time. So very graphically, you can show your clients, demonstrate to them in pictures and colors how long you're going to be an investor for. And then you can go back and say, so look, your attitude to risk questionnaire has come back as a 60-40, but would you agree that you should be, a much greater equity content? And if people aren't still not coming on that journey with you, because I saw you doubting it, Andrew, I'm always okay with a short, medium, and long term, right? So short is your
different pots.
Yeah. And then that will help at least most of the portfolio be in the correct 80, 20, or 100%, as the case may be.
Yeah, these attitude to risk questionnaires have been so destructive. They've decimated more wealth than I think. Yeah, I think all of the fraud combined in this space, by a factor.
Agree.
It's decimation
institutionalized fraud.
Okay, it's diabolical. It boils my blood.
I just speak a lot when I've read the question, but I haven't inputted to this. But Lewis, this is such a big issue. I think this is the biggest issue in what this thing of ours really taking in the round. And I think you need to find a new firm because what you're doing will kill you from the inside. There are plenty of firms out there who don't follow such a prescriptive model. Andrew's absolutely right about the compliance people. They don't have a bloody clue. And you might need to move on, my friend. And I hope you can do, because there's a part of you inside that's dying by doing this, because you know it's wrong, and it is wrong. Right, let's move on.
But just to find a point on that, Nick, if he can get the bulk...
Keep going, Nick.
If he can get the bulk of his clients into an 80% equity portfolio...
If he can, but it sounds like he's going to have a real
bad clients into an 80% portfolio. Just pick your battles and move on.
Yeah,
like, you've got other stuff to worry about.
Telling me he can't.
No,
Every road leads to 60-40, which means
you
know that you're...
Carl.
Right.
The rest is politics, the US version. Catty Kay and Anthony Scaramucci.
Do the fandango.
Yeah, he was
Mooch.
Yeah. Very good. Yeah, I got that as well. He worked for Trump, I think, in the first, and he got fired after only a few days or something like that. It's really good. Now, look, we've joked often, or I've joked often, about the echo chamber. So it is a little bit like my echo chamber. So when they were taking apart Trump's first 100 days, it was critical. So I then did listen to the All In podcast. Guys, I have to say the All In podcast that is an echo chamber now. They're all just confirming each other's, everything's great and we're all great and our buddy David Sachs is great. I'm not loving that as much as I used to, being honest with you. I'd like more dissenting voices in it. But
even J. Cal has kind of merged
he
across.
vacillates. He'll turn
Yeah,
back
he does,
again as soon as he gets the
actually,
chance.
you're right.
He's a slippery sod.
Yeah, but I only mention it from the point of view that, like, if you want two different podcasts to give you two different views on the first 100 days of Trump's administration, there you go. There's two. But the Scaramucci, Catty K, they're out every few days.
Do the fandango.
It's very entertaining stuff, I would say. Yeah, you guys will all probably hate it, but it's entertaining.
Don't mention the UK version of that. Rest is
that's
politics.
even worse. That's even more left-wing nonsense than the US one.
Actually, Carl, I think you do make a fair point, because I would listen more to the All In, and it is a bit one-sided. We should listen to the opposite side from time to time.
Yeah.
Right, my turn. Very simple, very effective. I've just come across this recently. I think it's a fantastic newsletter called Market Sentiment, obviously from the US, but regular newsletters, articles. It's what do you call that thing that you use, Nick, for your newsletter?
Substack.
It's a Substack newsletter.
Okay,
it's really high quality.
Now. There we go.
Marketsentiment.co. Just subscribe it and read it and use the data. Very helpful. That's me.
Okie dokie, lovely. So me next. So Alpha Architect is a podcast. It comes out very occasionally, no more than once a week, I don't think. And they had one recently on the Trump bear trap. So it's a bit nerdish, a bit down in the weeds, but they were talking about how the markets have reacted since Liberation Day on April the 2nd, and how the various premia that go into equity returns are all over the shop. So large cap growth has taken the battering. International value apparently is soaring away. US small caps have gone through the floor because they're affected by tariffs more than bigger firms. They're down by 30%. Whereas mid caps are up and they're roaring. So it's just a really, the four-factor model has size, has the value versus growth thing, it has profitability, and the fourth one escapes me, momentum. And what I took out of this was actually, we don't know what's going to be the next big thing, and just have a broadly diversified portfolio and roll with the punches. But it's quite interesting to see these nerds kind of come to that conclusion on their own time. I didn't realise the premium was so all over the shop at the minute, because I don't follow it that closely, but it really is. So basically, you want a portfolio that has a slice of everything, and just roll with the punches and come back in 30 years' time. Andrew.
Finally, mine is another podcast, someone who's been mentioned before on the show, Nikolai Tangen, In Good Company. It's a slightly older podcast, but it's with this guy called Paul Singer, who is the founder and a sort of activist hedge fund manager in the US. Paul Singer, he runs a company called Elliott Investments. I've been down a whole Paul Singer rabbit hole. No remarks, Nicholas. He's an insanely smart guy. Listen to this one podcast, and I'm sure you want to consume more stuff about him. Great stuff about business stories. There's a famous story about he owned a lot of the Argentinian sovereign debt when Argentina went bankrupt and a load of other stuff. So it's interesting. And my
Argentina.
final point
Is that
Argentina.
and is that Nikolai? Is that Nikolai who you and I met?
Yeah, close
That I
personal
introduced
friend.
you to.
A
Close
close
personal friend.
personal friend of both of ours.
What's the name of the bank? How do you say it?
Norgs Bank. And my final point
it
who is
Norges?
a friend of the show, Pete Matthews, who's coming to Trap Live. He's bought his ticket. I think he's doing the triple event. He's doing Brett Davison
Oh,
in
the
the
old triple.
day, Trap at night, and then Abraham's conference on the following day. He's got a new book out, Meaningful Money Retirement Guide. It's just sent to me today, actually, so I've not read it. So other financial advisors, please do support him. I'm sure it's going to be insanely good for clients. So yeah, that's Pete's new book, Retirement Guide. Thank you.
Okay, right. 90 minutes. Crikey. Just about alive, just about still friendly with each other. There you go, dear Trappists. Thank you for your time as episode 70 comes to a close and disappears down the U-bend of time. Thank you for your time and input on the show. Do leave a 6 out of 5 star review on iTunes or your app of choice if you possibly can. Leave a review on it. Like and subscribe to our YouTube channel. Well over 1,000 weirdos now subscribe to us, which is lovely. Until the next time from the Trap Pack, it's adios. Take care out there, and we're looking forward to seeing a lot of you at
See you
Trap
next
Live.
week.
Cannot wait. That's going to be amazing. Love you loads, and we'll see you as and when. Goodbye.
Bye-bye.
Bye. See you next week.